On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. Before you make any decisions, we recommend you contact an investment advisor. For more information about our services in that regard, or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning team, hope everyone is well. Let's run through some of last week's key developments, then let's turn our attention to the week ahead. Before we start, CGT, there was a big proposal from Labour out last week. I've had a lot of questions. What do I think of it? Would it work? Would it not? I've written something on that, which I will release this week, and I'll record a podcast episode. So if you want to hear my thoughts about that potential policy, then stay tuned. But anyway, last week, the S&P 500 index in the US was up 0.7%. It hit fresh highs, and it's wrapped up a very strong monthly performance for October. So that index has now risen for 6 consecutive months, and it's up 16.3% in 2025. So another cracking year after last year, which was a great one. The year before that was a great one. 16.3% with a couple of months to go. You add dividends onto that, you're probably at 17 or 18, and the long-term average is about 10. So it's been another fantastic period for investors. UK shares, emerging market shares, both up 0.9% last week. The Topix index in Japan up 1.9%. Europe and Australia bucked the trend. They were both a little lower, while the local NZX 50 here in NZ added 1.2%. On the back of some positive signs for the economy, we saw some good comments from the likes of Freightways, NZME, and the ANZ Business Outlook survey also looked quite solid. Interest rates in the US and New Zealand, they were up slightly. The US 10-year Treasury yield increased to just below 4.1%. The domestic 5-year swap rate here in New Zealand finished the week just below 3.1%. Gold down almost 3%, so it has had a bit of a correction. The precious metal is down about 8% from where it got to in October, but it's still up a very impressive 53% this calendar year. So I think it's still on track for its best calendar year gain since 1979. Right, some of the key releases, and last week central banks were very much in focus, and the main event was the Federal Reserve. So their decision came out on Thursday morning here in NZ. The Fed did cut rates again, but it did signal a slightly more cautious path ahead. So the Fed funds rate was reduced by 0.25%. That takes its upper bound to 4%. That is the lowest since 2022, and it's 1.5% down from the peak of 5.5% that prevailed in 2023 and 2024. That was actually the highest we'd seen since 2001. Now, it wasn't unanimous. There were 2 voting members who chose to do something differently and were outvoted. One voted for a bigger 50 basis point cut, and the other said he would rather leave things unchanged, no cut. So interesting, 2 dissenters and in 2 different directions. That got the market's attention, and the other notable takeaway was some comments from Fed Chair Jerome Powell in the meeting afterwards, the press conference, when he said that another cut at the December meeting was not a foregone conclusion. He said far from it, and that saw odds for another cut next month moderate to around about 70%. So people still do expect another cut from the Fed in the December meeting, but they're not quite as confident as they were before. So that was the Federal Reserve. We also had monetary policy meetings in Japan and in Europe. No change there. The BOJ left its policy rate unchanged at 0.5%. It was a split decision, 7-2. 2 voters would have preferred hiking rates to 0.75%. But the BOJ hasn't increased interest rates since way back in January, even though inflation is above the central bank's 2% target, and it's been there for about 41 months in a row, I think. So the next move from the BOJ is likely to be up, although that's unlikely to happen right away. It will move quite cautiously, and that rate rise might not happen until 2026. In Europe, the ECB also left interest rates unchanged at 2%. They peaked at 4% last year. It's the third consecutive meeting, actually, where they've left rates on hold after 8 cuts, from 4 all the way down to 2. So Europe looks to be done in terms of interest rate cuts. Inflation there has settled back to fairly close to the ECB's 2% target, and some of those risks to the economy haven't gone away, but they have eased a little bit. So I think there's a good chance that the ECB has finished its easing cycle, and with that policy rate at 2%, that is probably where it will stay over the foreseeable future. Here in New Zealand, we got some business confidence figures for October. Good news, improving sentiment from firms. That's good to see. Headline confidence in the ANZ Business Outlook rose from 49.6 to 58.1. That is the highest in 8 months, and we saw a move upward too in the own activity measure. It was a bit more subdued, but it's still increased, and it's the strongest we've seen since April. ANZ did note that reported past activity was suddenly looking much better, in particular for the retail sector. It actually hit the highest reading in 4 years, so that's good news. The retail sector is obviously one that is quite sensitive to consumer sentiment and spending and interest rates, so that's not surprising. However, construction still stood out as being under quite a bit of pressure, so it's still a mixed bag out there. Inflation indicators fairly subdued, but I think all in all, good to see firms starting to feel a little bit more upbeat. Looking to the week ahead, and we are still grappling with that government shutdown, and the list now of delayed US federal releases continues to pile up, because that shutdown is not showing any signs of ending. So on Friday last week, we were supposed to get the October PCE inflation report, didn't get it. This week, the monthly jobs report is due, and that's looking unlikely as well. That's scheduled to be out overnight on Friday. I don't like our chances of seeing that, and we didn't get last month's jobs report either, so there is looking to be a bit of a void in terms of some of those economic indicators out of the United States. That means investors will need to rely more on private sector releases, such as the October ISM indices, the Institute for Supply Management Indices. One of those is out on Monday in the US. That will be for the manufacturing sector, and then we'll get the services sector reading on Wednesday. So this will be useful. A month ago, the manufacturing ISM hit a 7-month high, so that's good news, although it did remain under that break-even 50 level. It came in at 49.1. The services ISM was also softer than expected. It came in at 50.0. So we'll be watching those two overnight on Monday, overnight on Wednesday, hoping for some good numbers. Also, more central bank meetings to come. We obviously had a big week last week with the Fed, with the Bank of Japan, with the ECB, and that continues this week. We have the RBA, the Reserve Bank of Australia, on Tuesday afternoon at 4:30. Little chance of a cut there. The RBA's policy rate is sitting at 3.6%. We did see some stronger than expected inflation figures last week. The trimmed mean CPI rose 3% in the year to September 2025. Markets were looking for 2.7, came in at 3. So that's the highest since last year, and it's the first increase since 2022. So that will probably see the RBA remain on the sidelines. No change expected on Tuesday. The Bank of England on Thursday evening, also no change expected there. I would expect the Bank of England to just stand pat. So both those central banks have left rates on hold at their last meetings as well, and they are taking a slightly more cautious approach as they look for opportunities to ease interest rates further. They're just fighting stubborn inflation in some places. Here in New Zealand, it will be a busy week. We've got a dairy price update that will be out early on Wednesday morning. Seen a bit of weakness lately in the GDT results. Prices fell again at the last auction, and that was the 5th consecutive decline and the 9th decline out of the last 11 auctions. So the headline index now 13.4% below where it got to in May. That was a 3-year high, and down 4.5% year to date. So not terrible, still looking okay, but if the weakness continues, you might see people start to question whether Fonterra can live up to that $10 payout that many are expecting. So early Wednesday morning we'll get that dairy auction. Also here in New Zealand, the key release will be the labour force report for the September quarter. This is out at 10:45 a.m. on Wednesday, and the unemployment rate is expected to push a little bit higher. It's sitting at 5.2% at the moment. It's been ticking up from where it got to during COVID. I think it got as low as 3.2%. That was the lowest we'd seen since the 1980s. Expected to rise this week to 5.3%. Now, that would be the highest we've seen since 2016. However, it would also represent the peak in unemployment for this cycle. So the Reserve Bank actually sees it peaking this week before coming down to 4.9% through to the end of next year, and then down to about 4.5% the year after that. So the bad news is it will be going up. The good news is this is hopefully as bad as it gets. And unemployment, remember, is a lagging indicator. It doesn't tell you much at all about what is ahead in an economy. It is one of the indicators that lags where the cycle is at. So you very often see unemployment still rising, even when an economy has turned a corner and started to improve, just like you often see it still coming down when an economy has entered recession. So don't panic if you see a 5.3 and it looks pretty ugly, worse since 2016. We are still confident that things are improving and will continue to improve into next year. This will be the last major release ahead of the last Reserve Bank meeting of 2025. That occurs later this month, late November. Markets are still fairly confident that we will see another 0.25% OCR cut. I think we will as well. That would take the OCR to 2.25%, and then we'll just have to see how the economy responds to all of those cuts, because there's a bit of a gap between then and the next meeting in mid-February. We'll have a new governor too, so that will be interesting to watch. So Wednesday, a big day for New Zealand with those two releases. Also the latest financial stability report from the Reserve Bank of New Zealand. That will be out at 9 o'clock on Wednesday, and they do a press conference. They used to do it at 11. I think they might have moved the timing to 1 p.m. for that, so we'll just have to wait and see. But the financial stability report comes out twice a year, once in May, once in November, and it's sort of a big picture look at risks to our financial system. So always a really interesting read, because it does talk about some of those longer term structural issues that we're facing. So it's always really fascinating. I find it a really interesting one to take a look at. So keep an eye out for that one also on Wednesday. Last but not least, we have plenty of results to come here in New Zealand, a couple of AGMs, Chorus, Vital Healthcare, Spark, across the Tasman, some earnings releases, Westpac, National Australia Bank and Macquarie Groups, a lot of the banks releasing results, and internationally that September quarter reporting season will continue as well. I think there's about 140 S&P 500 companies set to report results this week, and plenty more from elsewhere in the world too. So lots to watch. Clorox, AMD, Nintendo, Pfizer, Uber, McDonald's, Novo Nordisk, lots of companies to focus on over the balance of this week. So that's all, team. Thanks for listening. Enjoy your week, and we'll talk again soon.
For more insights, visit craigsip.com.